Greetings, YouTube. In this video, I'm going to be showing you how I take my trades precisely without changing anything. Small market structure, drawn towards liquidity, finding a point of interest, as I call it a point of entry, and having a protected low or a protected stop loss. And simple as that. Let's go through it. It's basically market structure. Everyone by now should know about market structure. If you use that video, most of this type of trading, please find out about market structure. Firstly, the market moves in waves. Let me call them waves. More like a high, a low, a high, a low, a high, and vice versa. That is how the market moves. So when market breaks, we call this a break of structure. So what we are looking for exactly in my way of trading is finding the entries on the retracement to push the market back up. So if the market is coming, it's coming from up like this, I need to find reasons for me to get an entry that makes me push the market up with a protected low. As simple as that. So as you know, the market moves up and down, down and up, higher highs and higher lows. So basically, this is how it goes. You need to, for my strategy to work for you, you need to know. First thing is, uh, first thing you need to know is, sorry about that. First thing you need to know is market what? Market structure. The other thing is liquidity. I'll go through all these later. The third thing you need to know, part of my checklist is uh, just a moment. The other thing is okay, my network is back. Sorry about that. The other thing is point of entry. Some people call it point of interest, but it's just a point of interest before you find a point of entry. And lastly, you need to have you need to have a protected protected stop. I'll give you real time market examples in a bit. Uh, I'll give you real time market examples in a bit. So for market structure, like I started explaining, let me delete this. You forgive my network today. I don't know what is on there. acting up. So market structure is basically that. Basically, we use swing structures uh, to find perfect trades. You need to go to the big time frames. The small time frames are always loaded with too much noise. You can't find where market is usually headed. So for market structure, like I told you, your market comes from, let me say it's coming from down, going up, down, going up. So for us to find an entry, we need to know the second thing is what? Liquidity. So liquidity has to lie below these areas here. Below these areas, since we're in an uptrend, we'll be looking for only what? We're looking for only buys. So when we find our liquidity, which is lying below these areas, we need to see something like a small sweep there, trying to see if there's any liquidity, a break, then we come back to our points of entry or interest and fly with the market. So it's easy to identify when you do so much homework. I call it homework because you need to practice. As a trader, you need to forward test, back test. You need to go hard if you want to make it happen. So usually I have this as my liquidity around here. This would be my liquidity. Then I'd have my POI, our point of entry around these levels here. It's usually below liquidity. Of course, this is a mere representation. It can't be the perfect. Then I'll have my protected lows just down here. And I have a protected low right there. And once I have all these in check, I have a break of structure, of course, somewhere here. Then I'll enter my trade. That's below my protected low. Usually giving me a 1 to 2. At least, at most, a 1 to 3. As simple as that. Uh, Trading should be so easy. And if you master this, then in a few months, if you're not profitable, in a few months you will be, trust me. Yeah. So I'll go through some live examples. I'm going to actually use the examples I have marked out on some trades I took last week. So let me delete this and we'll go to real chat examples. So my it's not going to be so long actually. So this is a trade I took last week. Yeah, let me start with this actually before I go to other examples. This is a trade I took last week, and I'm using the same base principle. I'm using the same base principle. So when you go to let me use the big time frame. When we talk about structure, and you see what I'm talking about. For this particular one, market is coming from down. Yeah, the market is coming from down, getting higher highs and higher lows, but Right when it reaches this point here, that is why we should focus on this point here on the 4 hour. This point creates this and creates a high, but immediately it creates that high. Sorry about that. My network is really a mess today. And I wanted this video raw. I don't want to overforce anything. Try to check it out. Try to tweak things. Now I want to make it transparent. You see how simple and easy trading is. Yeah, so after it breaks structure, it usually does what? It will create liquidity. I'll show you in a smaller time frame where my liquidity is. Remember, we were in an upside, but the market all of a sudden it's going up, but after that it comes back down. So why are you coming down if you're continuing up? If it's an upward move, why are you breaking the last low? So that becomes one of the signs I use to take this trade because it's all about market structure. If you know market structure and you started for this strategy, so it should have been the last high for a low, then another high. So this high should have stopped somewhere. This low should have stopped somewhere there to continue, but it broke this high, this low here. So immediately there, I'm trying to find liquidity, as you can see in this example here. So you need to understand liquidity properly. You need to know the types of liquidity, structural liquidity, and how liquidity in this. I think we shall do that part in some other video. But for this video, I basically want to combine everything at once. And then we can break maybe structure liquidity point of entry in further videos to come. So, like I told you, once there is market structure, we'll find liquidity, and this liquidity was found with this 4 hour candle here, but not on the 4 hour candle because it's just a week. You can't notice there's liquidity there, so you have to go down to the smaller time frames. And for smaller time frames, you can see liquidity was formed here on the 1 hour. That's enough sign. Liquidity should, if it appears in such format or such shapes, such shapes, then clearly you know that that's strong liquidity held there, and price usually comes back to sweep it because those are stocks of retailers, and the big players usually come back to sweep such liquidity. So after finding that, or wait for, of course, break of structure, then just be patient enough. I'll talk more about my point of entry or interest, but they are usually on the previous low. The previous low before the low that broke and brought the market back into play. So usually you'll have after a point of entry, after marking a point of entry, which is slightly should be above. I mean, should be below liquidity if you're taking a sell, or below liquidity, usually below liquidity for a buy or sell, like it should be below. Below liquidity for a buy and above liquidity for a sell. Remember, you want liquidity to be soaked and price to tap into a point of entry. Usually it's a point of interest on the big time frames, but you need to make it precise for a point of what? Entry on the smaller time frames. So basically after doing all that, the last thing is to have a protected stop. And For this particular one, you see, I would have had a stop above here. That would have been a big stop. But since I know that usually the market trend tends to reverse around the point of interest, for this one I didn't have to put it so wide. I just put it above this candle that has a gap, and you can see clearly price just came and shorted. So I'm still in this trade actually. Doesn't hit TP. Right. So I want to do for this particular one, and you can see that I I took it on I took it on Thursday last week, November 25th, no, November 28th, and today is Monday. Of course, Friday it's almost hit TP, but it's back up for some time. But since I have a protected stop, I don't worry about this trade. It's already happened. So that's where psychology will come in as a trader. You have a working strategy. So why are you worried then? If I lose this, if I lose this, I'll have more trades coming back. I have a watch list of almost 8 trades for this week. Of course, I'm not going to take 8 trades. I'll take the best out of the 8. So you've seen with this example here, basically what you need to know. You need to know market structure. For this time, market was going up, but then after creating that last high, it came back to create a low. But before even that low was broken, liquidity was created somewhere. Then price just came back, tapped into this POI here, slightly above the liquidity, and shorted. As simple as that. Do this. I know there are so many people that try to trade on demo to see how strategies work. Do this on a demo for a month. Come back and tell me. Come back and tell me. So let me give you another example. I'll give you two more examples and call it a day. I'll be doing more videos about this kind of strategy. Yeah. For years I was looking for something that would work, and towards the end of last year I bumped into it and I tried to perfect it this year. And it has been doing numbers for me. So let me give you this example and see if this triggered yet. So this is my watch list for the week. Yeah, this is my watch list for the week. Yeah, as you can see, this has not yet been triggered, and it's the same criteria as the last one. Same criteria. But, uh, so same structure, same scenario with the last example of A, B, and Z. So we have price coming from down, coming from down, and all of a sudden we see a change. We see a change. So this was the last high that was created here. First created this high, and before created this, and broke this. Price should be continuing, but then why is it coming back? Why is it coming back down? So basically, it will come back down, trigger some liquidity, and move down. And I'm not saying it's going to change structure. all of a sudden it's going to change structure and start a downtrend. You know, for a moment you will have price trying to trigger this liquidity. You can see it's a week on the 1 hour, but let's try to break it down. Let me see on the 30, 30 it's still a week, but you can see structure right there, liquidity structure, which is usually you call this resistance. I'm sure that's called resistance. If you have a bullish and bearish candle, you get resistance on the upside. Then you have a bearish and bullish, you get support on the downside. So you can see clearly liquidity is created on resistance, but I just try to mark out the week because it's around my point of entry, which is my point of interest, and I have my protected highs, which is my protected stop. So I'm just waiting for price to come, trigger me in, then come for my 1 to 2. As simple as that. We just need to know market structure, guys. You just need to know market structure because it takes time to understand. Let me say on the day that market is bullish, so you break it down to the 4 hour. I think if you've studied like a candlestick Bible or something like that, you know about top down analysis. Yeah. Start from a bigger time frames, break it down to the smallest of them. But this strategy works very, very precise and perfect. You just have to execute it like whatever you see, just take. Of course, as you learn more about it, you know that the trades that will be a plus and others won't work out every time that they should. But if the trade is, let me say, if you catch a trade on a structure like this, see here, I'm doing a counter trend, right? Because we are bullish. But if you're catching a trade around these levels here to continue up, that would be a plus. They usually work out. I'm not saying this. I'm not saying this ADJPY is not going to work out because it's part of my strategy still. But usually, the ones you take with the trend are A plus and they work out so well. Uh, I'm going to give you another example. I'll give you two more examples. Then we call it a videos. Let's say. And this strategy doesn't work on only forex pairs. See, I have some setups on Bitcoin. I have setups. Usually, I get setups on gold and silver. I have more swings here, but these are not trades for a week. So perfect. On the 15, you can see that now liquidity has formed that shape I'm looking for, more like an A shape or a V shape. So that's what I'll be looking for. And see, it's formed and structure has broken on the downside. So I'm just waiting for price to come and sweep that liquidity, get into my POI, and sell for a simple and easy 1 to 2. Most of the time, I prefer 1 to 2 because as you learn about it, because I've been using it for some time now, yeah. As you learn more about this, you usually see that 1 to 2 oh, price will usually move for 1 to 2 and then it will stall a bit. Yes, it can continue, but yeah, you take what the market gives you, yeah, because more opportunities will present themselves. Yeah, at most, I would do a 1 to 3. So let's look for another example of your LED. Let's see your LED. Your LED. Of course, I'm on the 15. I need the big time frames. That's where the magic happens before you break it down to the smaller time frames. Um, I chose the wrong day for this video because our network is really a mess. LED, yeah, it's yes. So for beginners, it's a bit a mess for you guys, but it's the same thing right here. On the 4 hour, for the longest of time, price was coming from up here, and this should have been the last high. Yeah, but eventually the price has broken it, so structure has changed to the upside. Right? Structure has changed to the upside. So if I delete that, we're going to focus more on this. So break it down, let me actually mark it up for you guys to see it properly. So in this area right here, around there, yeah, that area, mark it properly. Then we're going to see how it goes down. Let's kind of mark out all this. We'll mark out all that. And this is what you're going to be focusing on. Since we know that price broke this structure and started an uptrend, when we broke this, we started an uptrend and we've been broken another high, meaning that price is in an uptrend. So a buy from our POI or point of entry would be so nice. So we break this down. What becomes the protected loan here? Like I told you, if price is going to continue down, even if it did break this high, even if it did break the initial high, initial last high on the what? On the previous leg, which was this downtrend leg, this down leg here. Even if it did break this, price shouldn't be able to do it to continue. If it's going to continue down, it shouldn't be able to break this level here. So immediately they break this, we know that in this area here as well, we're going to find our protected stops. And before we find our protected stops, we need to know if there are liquidity that is going to be induced to tap into our point of entry or point of interest. Like before you take any trade, you need to mark them out. If a trade has the structure, because all trades have structure, if it has a point of entry and a protected stop but has no liquidity, then you can't take a trade. You can't take a trade like that. So that is what we are going to do. And for this particular one, you can see it has everything in check. Most importantly, the liquidity that is going to be saved. Just be patient. It will always come to you. It will always come to you. You just have to be patient, guys. Liquidity always gets induced or tapped into. So on this is the 4 hour, you just see liquidity as a week. But let me break it down to like a 1 hour maybe. And we see if we can see perfect clearly. You can see that this liquidity right here is having that sort of shape that we want for it to be taken out in this house. And since we know that this is the last law, because the market shouldn't have created this law as it had started an uptrend, because it had started the uptrend by breaking somewhere here. So why is it coming back exactly to break this high? So these are sweeps of liquidity and smart money or big institutions always want to have their stocks protected. So that retailers who entered here around this area here are already taken out by this move. That's why you have a big move. But orders are still around. Orders are still ready. The last orders of that bullish move are waiting. And that's where when you want to enter, you just have to be patient with it. You don't force it. As soon as you start forcing it, maybe you're around this level here and you see that your liquidity has not been tapped in and market is reversing and you enter, then this is a first trade. You'll be in the middle of nowhere. There's no stop loss for you here. To be a big one, and maybe if you want to take a 1 to 2, you'll have to wait a little bit longer and maybe take a few profits. That's if the trade goes into that goes that's if the trade goes your way. But mostly having a let me call it a strategy. Having a strategy is like having a box that is ticked. If you have a box that you have to tick and you have to repeat that every single time. Don't just jump onto it. Yeah. At the beginning of our journeys, we were all told by all people that had made it, we were all told that guys stick to the plan, have only one strategy, follow the plan. But you don't see it at the beginning because they're like, what are these guys saying? And you see a person executing the same system over and over again. Yes, they have losses, but most importantly, they know that this thing works for them. And that's how they make it big in trading. So that is it. On the 1 hour, of same liquidity. So I don't care about what happens. Yeah, this is noise for me. I'll just be alert for price to come back to my MG. Usually, there are more confirmations. The pros use anyway. Or the flat holds extra confirmation like delta, things like that. Maybe with time I'll go through them. But this is basic. It is basic. Like when you find any of this happening, execute. You have a checklist, everything has happened, the market structure is in order, you have liquidity lying there waiting for it to be swept and you get it triggered in at your point of entry and then you have a protected law. Your four things are marks and checks, enter a trade, set a limit on a trade, watch what happens. Do it consistently and you will see what profitability looks like. I'm going to give you a last example. I'm going to use GBP I can't use all of them because all of them are same thing, honestly. But I just want to randomly give you examples so that if this video has made, even if it's a little sense, I don't say it is going to be the best video out there. But if someone picks something, you can always tell me and I'll make a better one on what they really want to hear. So finally, this is GBP, the British pound against the Australian dollar. So once you figure out this, you won't even have to do much about structure and all that. So this is a 4 hour time frame. Like you just open the chart and you know what you need. So this was a winner for me also. Uh, Maybe I can work it down sometime later. This video is so long, and this one is long like this, and they did so quick. So we are talking about this one that is going to get executed. So you can see twice was in a downtrend for some time, and all of a sudden, price has done one. Set these lows, created the last lows. These are 4 hours. So it's just showing me market structure. Of course, I found this liquidity on the smaller time frame, but you can still even join this week on in this time frame and go down and see if it makes sense to you. Might be the liquidity you need. So with this price making this protected dollar low, I know there's a previous low there that was taken out, so that becomes my POI. It's not my point of entry, remember, it's just my point of interest. Then where is the market? Instead of continuing down, should be where we're coming from up in the big time frames. This is the 4 hour. We are coming from up creating this. So if we created this low, then why is the market trying to create all this and breaking this? That shows that the market has reversed. So reversing the market, so people who are already trying to catch buys are the ones that are going to make money off this. Yes, I know what some people might be thinking. Why not short it? If you know it's coming here, why not short it? Yeah, you do that at your own risk, yeah? Because the market does what it does. So you might think it's not shorting from here, but it will take out this high. That is a loss for you. Take out this high, you think it's going to short for to this side, create another high, take you out. So usually just take a setup that you already marked, like your pre-market analysis or your entries before market opens. So we go to the 1 hour, and as you break it down, it becomes more clear. That is the beauty of structure. Candles get clear with the more you break them down. What you didn't see in the big time frame becomes clear smaller. It's not on the 1 minute. That is too much noise. More of the 1 hour, 30, 16, even the 5, but the smaller ones, it's too much noise. So this is the liquidity. On the 4 hour, it was a week, and on the 1 hour, it is structure as you see it. Support, which is liquidity, because price left orders at my what? At my point of interest, which is my point of entry. And even goes down this side, continues this side where I took this. You can notice that this was also a 1 to 2, and this is also a 1 to 2. So it depends on where the protected low is, protected stop most of the time. So if I have a protected stop around here, you see, the risk reward gets heavier. But you just want to take profit. Just want to hit a 1 to 2. You just need to know what you want as a trader. You can't be hitting runners every time. Yes, it happens, but not every time. So if you really want to make it in the long run, because this puts pressure off you actually as a trader, you don't have to look at the chart all the time. You might set alerts anytime your trade is coming your way. Let an alert come through as a notification on your phone. Check out and see if your trade is ready. Execute the trade as you have a limit you've entered. Wait to see if you hit take profits. Simple as that. So it's the same criteria here. What am I looking for? Structure. Explain the structure on the 4 hour time frame. Structure is the uptrend is already happening with these breaks, all these breaks happening. So structure is on our side. But do you have a protected stop? Yes, we do. A stop that took out all this, and we are sure that even smart money, all the big institutions, all the big players have their stops here, and it will usually take a massive order to take the the what? To take a stop out. So that is where we want ours to be also. Because first will be literally even might come even closer and reverse. And well, if it hits your stop loss, check the watch list. So many other opportunities coming up. Don't have to worry about one missed or one lost trade. So like I said, we have our structure, we have our protected stop, we have our liquidity, we have our liquidity. Then what else do we have? Our point of entry. Uh, our point of entry. Most people would, but that's a conversation for another day. Most people would say that price will always come back to the order block, the last maybe bearish candle in a bullish move, things like that. But if you find a nice point of entry, which is the last low recent before the newly protected stop, find something around there and should be near liquidity. Of course, you might ask why I didn't use this liquidity above here. Why don't you use this liquidity above here? Uh, yeah, in another video, I'll show you why you need liquidity just next to the point of entry and point of interest. Because it's usually the last liquidity they take out. Yeah, there's up liquidity that's usually above 50 of a thing. They usually don't. They usually don't work out. If it's work out, you'll have a heavy stop loss. You might even blow before you start crimping. So that's basically it. So those are trades I'll be looking for this week. Please, and you can subscribe. I'm new to this YouTube thing. Subscribe and comment on what you want me to talk about. What you want me to explain. Should I break them down shortly? Should I break them down? Structure, a whole liquidity as itself, uh, the point of entry as itself, and the protected stuff as itself. You can tell me that. I only need those four to live a good life, honestly. So, guys, thank you so much for joining my TED Talk. It's YouTube video about my strategy. See you in the next ones. Usually, I'm planning on starting live streams, showing you the trades I'll be taking during the week. That is Monday. Then we review them on Friday. So, live streams on Monday and Friday. You can also tell me if I should do that and it will help. Please comment, like, and subscribe. Thank you so much. See you in the next one. Peace.